All right, so let's dive into part two and see how we can create a business working line of credit and a business unsecured line of credit. As I say in part one, a business working line of credit is secure by your real estate. The business unsecured line of credit is not secure because it's unsecured line of credit. So let me show you how you can kiss your hard money lender goodbye. And people ask me what is a hard money lender. Well, they call, they call them also easy money lender. Who are these guys? They are mostly private individuals who are giving short-term loans based on the value of real estate. And usually is a 65% loan to value. So, for instance, if the property after repair value worth 100,000, that will give you 65,000. So those are the hard money. Now they are not cheap; they are expensive. They make the money available, but they have a higher rate, which is around 15%. Of course, that's 15% a year. Not too bad. So as they say, what is most important is the availability of the money, not the cost of the money. So they will charge you 5 point. I say 5%, but this should be 5 point, which is what you pay to get the loan. So, for instance, for $100,000, you will get 5,000 down and 15%. I'm gonna give you some example pretty soon. And because they are expensive, that is exactly the problem. They are eating up your profit, my profit. So we don't want that to happen to us. So here is two examples where you will see exactly how this can be a problem. I don't know why this is happening on the. Okay, here is example one. The purchase price is $70,000. Then the after repair value is 150. The repair is 50,000, 20,000. We calculate how much we have to pay for this property. If you don't understand the mail, this is the maximum allowable offer. I refer you to, I believe it's a video. I did a video just to explain what you. It's a video about structuring deals. So go and check that out. So we found out the mail is $77,500. So now we have to go and borrow that money. It's an okay deal. Now the hard money lender will charge you 5 point, which is here $4,875. That's what you have to pay to get the loan. How much will you get? 65%. That's what you will get, which is $97,000 to do this transaction. Okay. Now you pay 15%, which is 14,625 a year. So divide by 12. That's basically what you pay a month. So which is basically 1,200. It's a lot of money. Now, let's compare this to another one. Oh, compared to a 100,000 loan, hard money lender we charge you 5%. A line of credit is only 1 point down, so you're saving $4,000 right here. Then you have the 15%. You're saving another $5,000. Let's keep going. Gonna be amazed. Now we're talking about inspection. Well, hard money lender that charge for inspection. Usually line of credit, like working out of credit, they don't charge for inspection, so you save some money there. Then we pay 5 times inspection if you are doing a lot of renovation. Then that is $600 you will pay for the hard money lender guy, and you don't pay for all the inspection, all the working line of credit. Some charge, some don't. So you will have to do service. So total, look here, how much you are spending for the hard money for the same deal. $10,000 for $100,000 loan. So it's very easy to understand basically that you are spending about 10% more for hardware lender than a working line of credit. Isn't that amazing? 10% more. So if it's $200,000, that is about two $20,000 that you can put in your pocket. Think about that a little. $20,000 on the $200,000. That's a lot of money, my friend. But it can get worse. They also require a decent credit, money in the bank, and they can foreclose, so no delay in payment. They require survey, and they have a very conservative appraisal and very selective for neighbors. So they have the whole characteristic as a, a bank, no different. They have gotten so hard to make loan that sometimes I'm wondering why people still go to them. Well, there is a reason for that, and the only positive here is exactly right. The money is readily available. You can just go and do the deal. So I still recommend them when the deal is hot, when you can do the deal quickly. That will lend you the money very professionally and very quickly, and you can make money with them. Not my preferred method, but I have used them in the past, and I'm probably going to use them again if the deal is really good. So, are there any other alternative? Yes, there are. Well, one of it is home equity line of credit. This is the line of credit you take out of your home. It's like a second mortgage. It's not really a second mortgage because the line is there. You use it, then you pay the interest. Second mortgage is just fixed. It's there. You pay it's $20,000, $30,000, $40,000 that you paying down every single month. This is a line on your personal residence. Well, it's good to have, but not good to use because it is. Well, let's look at the pro first. It is readily available, but if it's not used, it decreases your debt to ratio, which is really good. The interests are tax deductible, but the problem is that they can be reported on your credit score, credit report, and they can negatively increase the debt to ratio. So that is going to your credit, and that's the reason I rather have them and not using them than use them and increase my debt because it's personal line of credit. So that's the reason I will not recommend them just to use for real estate. I rather use a business unsecured line of credit because, believe it or not, it's also tax deductible because it's a business line. The alternative is a secure working line of capital. Secure line of capital, which is the one you have with your regional bank, BB&T, Regions Bank, Flag Star, and all those little banks. And big banks give them too, SunTrust, Wachovia, etc. And these are used when you fund the deal, and then you just go, you ask permission, and then there we secure the line with the property, and that will give you easily 250. Well, easily not that easy anymore, but we see the step to have them, and the part 3 we deal with that. So you have to know what the business entity, you have to know your DUNS number. We get into that in the next segment, and you will also have to know your paydex score, and then you will go and apply for unsecured line of credit. This for unsecured, okay, but you can apply also for secure line of credit at this time when you have all the ducks in a row.